Today's topic is bulls and bears, a continuation of part 1. Bulls and bears usually refer to the economic situation or the business situation. It's about the environment of the stock market. But if you want to buy a stock, you have to know that each stock has its own unique pattern of bulls and bears. It may not coincide with the general environment. So if you want to buy a stock, you have to get a good feel about the bulls and bears of that particular stock. After getting a feel of the bulls and bears, you have to ask yourself what is the best time to get in and the best time to get out. Well, the best time is usually the beginning of the bull market for that stock, so that you can get in and make some gains. When to get out, of course, is the beginning of the bear market. So it's always the beginning. It's not in the middle or at the end. Now let me go through some sectors of the economy to help you understand more about bulls and bears. First of all, we look at the consumer staple sectors. This sector is very stable because of stable consumer demand and also strong brand names of these companies. And you also find out that for this sector, most of the companies, their stocks have long cycles of highs and lows. And as we have seen, they are least affected by the current deep recession. Let me give you a couple of examples. Coca-Cola, KO is the symbol. So I picked the month, September 06, etc. And you look at the price. It hit the peak around September 07, but then by February 09, it has come down to back to 37 again. And now, November, it has picked up quite a bit. So you can see, even during the recession starting last year, the price hasn't dropped very far. Another one is Walmart. The same, 42 hitting a peak August 08, and then at the low of the recession came back to 48, came down only a little bit, and now it has picked up. So these two stocks are pretty stable. I call them the high flyers during the recession because during the lows of the recession, they can still maintain a very good price. The other sector is the banking sector. Normally, the banking sector is also a stable business, but due to the recklessness of some major banks, the whole banking sector in the US almost collapsed last year. And so it hurts a lot of the stocks. Even now, after recovering some, the bears are reluctant to leave. Some stocks are still quite low. Bank of America, let's take a look. It hit the peak around August 06, from 40 all the way up to 64. And then you look at that during the low of the crisis, the bottom of the crisis, it hit $3 because Bank of America was thought to be insolvent during that time. And now it recovered quite a bit, but still is very low compared with the normal highs. Citigroup, another big one. The peak, May 07, and it almost went bankrupt February 09, down to $1. And now it has recovered a little bit, but still very low. So you can see this is the bull market from 48 all the way up. But if you buy at the end of the bull market, you must have incurred a lot of losses because eventually it came down to $1. Now, from here to there, it appears to be the beginning of a bull market, although we don't know how long it's gonna last. If you get in from here, you don't have that much to lose. The same is with Bank of America. This is at the height of the bull market, and now this seems to be the beginning. Now we come to the drug sector. The drug sector is also a very stable business because drug companies are flushed with cash, and you know that the demand for drugs, they stay very stable. Even so, the drug sector has been impacted by the current deep recession, and due to the uncertainties surrounding the healthcare reforms in the US, the drug companies are still comparatively low. The first one I want to look at is Pfizer, PFE, the symbol. And you can see the prices come down to about $12 during the low of the recession, but recovers only a little bit now. The other example is Merck. From here to there, quite a good run, but from September 07, it comes back down to about 20, and now it has recovered a little bit. The next one I want to talk about is the high-tech sector. Why is the high-tech sector so volatile? It's because this sector is subject to intense competition. The other reason is that high-tech products have very short product cycles. Two examples again: Advanced Micro Devices. And you look at it, you can see that you can see the volatility in 1 year from 05 to 06. It doubles, and then in another year came back down to about 20. And then during the low of the financial crisis, dropped down to $2. Recovers a little bit right now. So you can see the up-down cycles are very short. Dell Computers, 42, slowly coming down to 27, and then drop down to 8, recovers a little bit. So when you look at the high-tech sector, again, this period seems to be the beginning of the bull market. But if you got into the height of the bull market, you will have suffered a lot of losses.